All right, y'all. YouTube. Let's look at DXY. Dang, I thought I had a. Dang, I don't know what happened to it. I'll just go here. Use this one. All right. All right. U.S. dollar. All right. So the monthly time frame, bullish, clearly bullish. It's no argument about it, right? As far as the monthly is concerned, this was the last lower high that had to be broken to send the market in a uptrend. Let's mark off that break. 1, 2, 3, right? So, and then we want higher highs and higher lows on the lower time frame to confirm that ripple effect. You need that congruency between the lower time frames and the higher time frames to confirm that break, and just to give you, more clarity in the market. Price came up, came back down to test newfound support. You can draw some type of supply or demand zone right here. I really try not to get too deep into supply and demand zones. For me, it's just a level of support and resistance. I use simple concepts, simple price action concepts, nothing crazy. The most I have, I don't even use indicators. The most I have is some moving averages, but that's it. All right, so monthly time frame bullish. All right, so it is. We could probably got one more week in April, and this monthly candle right here, last one, current one, it looks like it's probably going to go down. It's probably going to be a bearish candle. So yeah, US dollar might be going back down, right? Not much happened right here. If this closes bearish, you can consider this as a lower high at that point, right? So that means it's a test. It's a test, and price will continue going down. It'll be a 1, 2, 3. You can say was it evening star or bearish engulfing. I normally just say a bearish variation, because candlestick patterns, they can come in a variety of different forms. It doesn't have to exactly be an evening star. I say bearish variation. Variation just means that the sellers are winning, but they're winning in a multitude of candles. So instead of 3 candles, it could be 1, 2, 3, 4, 5, 6. But it's still, the sellers are still in control. That's probably the biggest thing you get from it. All right, so let's go to the weekly. All right, so the weekly time frame is bearish, right? The last low that was broken was right here, right? Mark that off so you have a point of reference. Candlesticks, mark the candlesticks off. So 1, 2, 3, 4, 5 candles, right? And you should see lower highs and lower lows on the lower time frame to confirm this break. Right, price came down, then came back up to test newfound resistance. All right here, it's a zone right here somewhere, some type of supply or demand zone right here. But this is resistance, that's ceiling. So for the weekly, let's put bearish, clean bearish on the weekly, right? Structurally, market structure wise. What else? Yep, and this is a lower high. This is a lower high. A lower high was created right here, and lower highs are a good indication that the market is probably going to go down. And I say this with a grain of salt because it's the US dollar. Heavily weighted on the news, heavily weighted on the Fed, the Federal Reserve. Interest rates, there's a lot that can happen just with this index alone. It's not against anything. It's not against the yen or chef. It's just the dollar by itself. So I can say this today and something else will happen tomorrow. But I think personally that the US dollar is going to be going down. It's a lot of things that's going on right now in the news, a lot of deals being signed, and yes, if you know, you know. If you know, start keeping your coins together. Maybe buying some Bitcoin, maybe buying some crypto, maybe buying some gold, but I don't know. It's a lot of unknown as far as the US dollar right now. You know, if you trade, if you're into the markets, if you know anything about the economy, then you know there's a big scare going on right now. I don't want to get too deep into that, but just start watching the news, start following the US dollar fundamentally, and you will find out something, right? But technically, it's looking bearish, right? All right, let's go to the daily. All right, daily time frame, bearish. Right? So, last low that was broken was right here, right? We marked it off with this purple line right here. And then we marked off the candles that broke it. 1, 2, 3. Clean break. This was the low. These are the candles that broke that low of support. Price came back up to test newfound resistance. And then it started coming down to test. Hey, it's another test right here, right? So it's probably going to go down. Pretty sure it's going to go down. But we don't trade what we feel, right? We only trade what we see. So the market is probably going to go down right here. So let's go to the H4 time frame real quick. Alright, let me see. Yep. To me, this looks like a descending triangle. Now it's came during an uptrend, but the descending triangle has a flat bottom. If you're up on your candlestick patterns, your candlestick formation patterns, you will know that a descending triangle has a flat bottom, right? It starts to consolidate to a point. You know, it slopes downward, but it has a flat bottom, and they tend to go down. Now, can they go up? Yes, but for the most part, they tend to go down. So, yeah, H4 is bearish as well. But yep, that's all for the US dollar. Technically, fundamentally, keep your eyes on the news. You never know what might happen. Anything can happen at this point. It's currency, right? And what they say, recession. I think so. 2 quarters, I believe it's 2 quarters of a market going down. Is it by 30%? 25 or 30%? 2 quarters. I think that's considered a recession. But don't quote me on that. I'm gonna look that up. But yeah, alright y'all. I'll see y'all on the next video. It's gonna be GJ.